Friends, my name is Pramod Bhuvan. Most of you may be knowing me, but very briefly introducing myself, I'm Pramod Bhuvan. I'm the director of Riverbank Insurance Brokers, most popularly known as insurancemanager.com. Today, I welcome you all for this wonderful session and informative session on fire insurance claims for stock. Uh, I will be joined by my colleague, Mr. Lakshmi Narayan Shanbag, who happens to be an expert in commercial line claims. He has experience of working with public sector companies like New India and private companies including HDFC Ergo and L&T in the past. He's currently helping us handling corporate claims for fire and marine in both MSME and large corporate segment. Shanbag sir would be taking us and deep diving us through very critical aspects of stock insurance claims, including how to value it right, what are the statutory compliances, requirements of insurance companies, how do you draft your claim documents, then negotiation with, of course, surveyors and settlement with insurance companies. We'll also be very briefly touching upon aspects of coverages under the fire policy. Okay. A copy of the presentation will be made available on our Insurance Manager YouTube handle, which can be viewed at a later date. If you have any FAQs during the session, you can type in the chat box and we'll take it at the end of the session. Thank you so much. Okay, as I told you, this is a very brief synopsis of the today's topic. We will be discussing on the impact of losses on businesses, how claims impact business in the short term, in the long term. What are the insurance companies' expectations on underwriting, and how do you design a right policy? How do you ensure that you take the right coverages under the policy? How the conditions will impact your claims. The third is very important. There are certain disclosures and statutory requirements, especially what are the implied warranties, what are the express. Some may be written in the policy document, some the insurance companies are expecting you to imply with those warranties. Then Shanbag will take us through quantification of stock losses. He will then the next slide will be on assessment of losses of stock claims, settlement of claims. What is the philosophy at our company, Insurance Manager, and what kind of stock claims we have recently handled and settled. We'll also take you through that. So here a very important aspect to set the tone as to why we felt this was a very really an important topic, which was impacting a lot of businesses. So of course we work very closely with a lot of plastic, chemical, textile manufacturing companies, and stocks being one of the most vulnerable of all the assets, like your building, plant and machinery. Of course, in large losses, nothing is left behind. But if you see the first point of the where the majorly losses are seen are stock losses. So once there is a loss, most of the businesses, especially the companies which have single unit manufacturing, immediately there can be a loss of market share. In the long term, there if the insurance companies are not settling the claims within the stipulated time frame, the businesses, they can go out of businesses also. So that was one of the aspect which we really identified in our experience of last 15 odd years, and we have come across cases in the market which is this is really happened. So and what are the challenges on the insurer front is mostly delayed and distress settlement, because the claim processes are lengthy, complex. Of course, there are delays in terms of survey, assessment, and disbursement creation, cash flow stress, and also dispute over policy wordings under insurances and documentation. So what was the way forward? We thought of streamlining the claim processes, ensuring a greater transparency between the surveyors, insurance companies, and all the stakeholders who participate in the claim process. And most importantly, how can we make the MSMEs more aware about their rights in the policy, the documentation to be done, what are the coverages under the policy, claims procedure. So it is more of an industry advocacy which we intend to do to ensure that the standardization of claim settlement process is achieved. A very important slide here on fire claim statistics from IRDA. So one of the aspects which is discussed here is the claim paid ratio. So claim paid ratio is basically accommodated on two, three aspects. One is the percentage on the number of claims. The second criteria is the amount of claims. Of course, claim ratio is the amount of claim which you lodge with the insurance company. Where if it is the amount, suppose you lodge 100 rupees claim, what is the amount of settlement with the insurance company does is a percentage of that of the initially lodged amount. Similarly, it is also calculated basis the count of the claims. So these are very few. If you see some of the large insurers operating in India, ICICI Lombard has the best claims ratio in terms of the amount of settlement. Similarly, HDFC Ergo is a stand apart in terms of the number of claims which are settled. Of course, these data can be read in different fashions, but broadly this is what we can make out of. Of course, smaller insurance companies which have lesser claims at disposal will fairly play better, but most importantly large players, if they have a better ratio, definitely that means they are doing something very good and right. Okay, financial health of the insurer, a very important criteria before you select an insurance company, which is the solvency ratio. So solvency ratio is the IRDA prescribed bare minimum at 1.5 times. So one of the aspect which insured should ideally identify is whether the insurance company has the ability to pay off claims, and the second aspect is the willingness to pay claims. Of course, willingness is something which you cannot measure, but whether the insurance company are really able to pay off the claim, whether they are financially strong. So one of the aspect to judge that is the solvency ratio. I think Bajaj Allianz is leading the chart with 3.91%, followed by ICICI Lombard. Some of the public sector companies have not done very well on the solvency ratio. It is because they have been not able to manage their businesses well, uh, but this is the trend. But of course, I feel a lot of times what we have seen in the market at the time of renewal, our discussions are restricted to comparisons of add-on covers. But in that process, I personally feel that we miss out on some very important aspects which are not projected on the Excel sheets during the comparison. And of course, one of them is the solvency ratio when you decide on the insurance companies which you wish to work with, especially for property claims where there can be exposure claims. Okay, so this is something which I will not repeat again, because these are few of the perils which are covered under the policy. All are aware, mostly like fire, lightning, act of God perils. But of course, we kept this slide because the recent regulations by the IRDA, where few new products were introduced. Of course, the intention of regulator was to ensure that there was no mis-selling of policies, which was mostly done by a lot of so bank assurance was one channel where there are a lot of mis-selling, where some of the covers were deleted, like storm typhoon was deleted and policies were sourced or solicited. Similarly, earthquake was deleted. So this was done basically to reduce on the cost, and some of the time the insured who were buying the policies were not able to do that due diligence and buying the policy, but at the time of the claim they were realizing that the policies were not good enough to cover their risk. So the regulator revised and relaunched few of the product called as the Bharat Sookshma Udyam, which was basically for businesses up to 0 to 5 crores. Bharat Laghu Udyam, which is for some insured from 5 crores to 50 crores. More than 50 crores, we have the standard fire and special perils policy. There's an upgraded version called as the industrial all risk policy, which is basically a combination of your all risk form of material damage, including the loss of profit and machinery breakdown. And of course, for mega risk policies are also available, where you can literally tweak all the entire policy wording, which is normally available for some insureds about 2,500 crores. Uh, so we spoke about the wording about the fire earthquake cover. So a few of the clauses with respect to the stock, because this webinar is purely and focused on the stock insurance claims. So few of the clauses, see, before we go to claim, we thought of actually appraising of you of few of the aspects which are very relevant. What things you should consider, ideally what kind of coverages or add-ons should be part of your stock insurance cover. Of course, reinstatement value is not applicable for stock, but that's something for building and plant and machinery. Declaration is an option available in case of stock insurance, which basically ensures that if there are there are very too many fluctuations in the value of stock, and you think that you end up paying higher premiums, you can give monthly declaration of stocks, and there is a pro rata adjustment at the end of the year possible, which helps you not to pay on the highest exposure at any point of time, whereas the premium is charged on the average. Similarly, a floater clause, very important. A lot of businesses are manufacturing units or warehouses with multi locations, so you can club all your locations under one single cover, take the floater clause, and ensure that you give one combined sum insured which is for all the locations. Similarly, there's a combination of floater declaration also available, which is called as a declaration floater clause, which combines both aspects of the those words. Similarly, spontaneous combustion, which doesn't resort to fire, should ideally be part of your fire policy. Some of the products or some of the raw materials have the capability of inherent vice, which means on its own they can catch fire, which may not be covered under your normal fire policy. So it's a very important cover. Similarly, loss minimization expenses, which is basically if there's a, in case, let me give you an example, if there's a Met Department warning that there will be flooding, and if you take your stocks to a higher location, and there was literally flooding in the evening, so what expenses which you incur will be made good by this policy under loss minimization. Similarly, claims preparation clause, firefighting expense clause. Brand and trademark, very important clause. This will be taken in deep dive by Shanbag sir at a later stage, but these are the basically very important for companies which have their own brand, which ensures the right of disposal at the time of salvage. Similarly, spoilage of material damage, it is related to stock claims where due to breakdown or any fire, all the molten stocks which can be which is not processed, and because of the claim it cannot be reprocessed, those kind of claims will be paid under spoilage material covered. Similarly, properties under care, custody and control, which is basically as a bailey, if you are receiving goods for job work or contract manufacturing, and if those are not under your ownership, those have to be declared under goods held in trust. Okay, very important aspect before I hand over the baton to Shanbag sir on general policy principles and conditions. So one of the aspect before you buy an insurance policy is very important is the insurable interest. So how does it work in case of a stock claim? For example, I just recently spoke about goods held in trust. So someone else goods coming to you for processing is not your ownership. As a bailey, you are responsible for those goods, but the fire policy reprimands that you separately declare these values under goods held in trust if you wish to be insured. Similarly, utmost good faith, very important aspect, or one of the conditions under the fire policy, which talks about that the insurance company will not be normally able to do inspect you on the declarations which you give. If you say that you have a factory at Ankleshwar and you wish to insure for a certain building value, plant and machinery stocks, or basis on the proposal, they will write the risk. So insurance companies are relying on what you say, and that is utmost good for it. Similarly, misrepresentation. Many times we have seen that sometimes there's a change of rating which is done to take discount in pricing, which goes very badly at the time of claim against the insured, or maybe so those kind of misrepresentations to reduce on the premium ideally should be avoided. Any kind of discount which is available in the market, we should ideally grab it with both hands, I would say. But tweaking policies, because this is ultimately a contract document, and if any misrepresentation can result into denial of claims. Indemnity. So insurance works on the principle of financial indemnity. So supposing if there is a stock claim, what will happen is the insurance company will give give you back the value of the stock, which can be market value or market value plus processing cost in case of WIP, work in progress. Similarly, in case of finished stock, it will be including the packaging, or maybe a contract price clause where you have already committed your clients or for deliveries on certain dates where the contract is freeze and you have started manufacturing. So those kind of indemnity, financial indemnity clauses can be incorporated. Similarly, cancellations of the policy can be done with either way notice. Proximate cost, very, very important aspect. The policy covers you for certain named perils. If those perils are not part of your cover, probably the policy will not trigger. Supposing we normally get such kind of claims wherein there are winds which are blowing at 30-40 nautical miles, which doesn't qualify as a storm. So if you have a standard fire and special perils policy, and if you put a claim for heavy wind blow, and if there is any water damage to stocks or machinery, the company may not pay the claim because it doesn't qualify as a storm. So storm is anything which is above 65 nautical miles, for example. Similarly, average clause, very important clause, which means if you have underinsured your goods and tomorrow if there's a claim and the insurance company identifies that under insurance, there will be a proportionate deduction in your claim amount. Similarly, contribution, which means here we have seen a lot of times companies to take. So now with Bharat Laghu Udyam, it's very quite possible that you have multiple sum insureds, you have multiple policies for single locations or maybe multiple locations. But if the claim is in single location, you bought one policy from banca insurance for the hypothecation, one policy from the broker for the stocks. In that case, if there are two policies available for the same risk, insured risk, then both policies will contribute to in the proportion of the sum insured to the losses. Subrogation, very important aspect these days. We recently faced a claim wherein there was a loss to one of the chemical manufacturing companies because the adjacent paper factory got a fire short circuit claim. And insurance companies are expecting you that you should write to them and ask for the recovery of damage. But the insurance company will pay you claim, but they are expecting subrogation rights. Similarly, in case of dispute, the policies are available for arbitration, which can be done. Shanbag sir will take us. So with this, I hand over the baton to Mr. Lakshmi Narayan Shanbag, who will be taking us deep dive into various aspects and intricacies of stock insurance claims. Shanbag sir.
Thank you and good evening to all. Just talking about myself, Lakshmi Narayan Shanbag, having an experience of nearly 28 years working in insurance industry. Out of that, nearly 21 years as an employee in the insurance companies, various insurance companies, public sector and private sector, Nivindia, Bajaj Allianz, L&T, HDFC, General Insurance for some time, and then with broking industry. Now I am going to take you through the intricacies of the stock insurance claims. Slide basically, before we go to the stock claims in detail, there are few aspects which we need to consider about a particular stock claim. As you know that the utmost good faith is one of the underlying principle of any policy, and so the claim. So there are few things which we need to disclose to the insurance company offhand when you take the policy. First is the claim experience of last 3 years. There are many cases in the market where the cases are rejected based on the non-disclosure of claim experience in the last 3 years. Storage of the goods having flashpoint below 32 degrees Celsius. The policies are issued with some occupancy for chemicals, others where the chemicals having flashpoint below 32 degrees Celsius are not been covered. However, when the claim happens, this kind of chemicals are found at the time of loss. This can be one of the reason why the loss has taken place. So the claim straight away goes into the rejection bucket. Third thing is similar. Cat 1, Cat 2, Cat 3. The fire tariff specifies the categorization. Cat means category. So the fire tariff specifies the categorization of the different types of the goods, and accordingly, you need to basically disclose at the time of taking the policy whether it is Cat 1, Cat 2, Cat 3. So highest highest category will attract the highest premium. So availability of the fire equipments, insurance company wants a customer to take a reasonable care of his property. So firefighting is one of the aspect where the customer or the policyholder should have a adequate firefighting facility to take care of any contingency of fire. Vicinity of the water resources. Vicinity is basically the closeness to the any water resource, because that can be the reason for the flooding. Information on any legal dispute on the property to be insured. So whenever a property is insured, supposingly there is a dispute or a legal dispute going on the ownership. However, we insure the property, and the person who wants this particular, the person who is in dispute may set this property to fire. So resulting into damage to the property. So insurance company feels that if this particular aspect is not disclosed, we would, if you would have had this fact been disclosed, we would not have insured the property. So if the goods under bailment or interest, goods under bailment, interest, and return agreements. So many a times what happens is that the businesses are done or the stocks are preserved in a rented property, leasehold properties, where you need to have the agreements, written agreements, mentioned consideration in it. There are instances where the properties of the directors are let out to the businesses, and there are no rents collected from the businesses, which may turn out to be a problematic situation in case of a claim. So having a proper written agreement with consideration mentioned in it is a condition precedent. Non-availability of the fire NOC or any statutory approval. So fire NOC, we have talked about firefighting equipment. So fire NOC is basically a periodic approval by the fire department stating that as per the requirements of the business, your firefighting facilities are adequate. Availability of the second-hand machineries in the capitalization. So as you are aware that the BLU and BSU, that is Bharat Laghu Udyam and Bharat Sookshma Udyam policies, have the basis of taking the sum insured has little bit modified from the standard fire special peril policy. Earlier, reinstatement value clause was a choice, but now reinstatement value clause is a compulsion under the BSU and BLU policy. Hence, taking the brand new replacement cost of the machinery is important. Generally, what happens is in second-hand machineries, the people insure the value which are procurement cost. So in case of a claim, there will be huge under insurance. Extent of stock stored in open. So any stock stored in open is an obvious damage because they are exposed to the sky, rain, and all other worries of nature. So stock in open has to be declared. Inward and outward job work. So job work is basically I'm doing job work for somebody, or I'm sending my stock to somebody for job work. So if somebody's stock comes to my place, then I need to insure that property also, stock also in my stock sum insured. And if I am sending outside, then that location has to be insured under my policy. Next. There are few statutory compliances before we go into the details of the stock calculation. Non-availability of the following points may prejudice the claim. The approved building layout and machinery layout from Directorate or of Health and Industrial Safety. Basically, earlier what used to happen, we were into developing phase. Our businesses in India were into developing phase. So little bit chaos in approvals and all. But now the central government has laid down a proper procedure by which a business has to take requisite number of approvals, and accordingly the building layout and machinery approval from the Director of Industrial Health and Safety, factory licenses, then the pollution control board licenses, NOC of fire department. Then if you are storing the hazardous goods, explosive goods, you need to obtain requisite licenses. And about the lease agreement and bailment agreements, we have already discussed. Next. Now, when we go to stock claim, there are some pain areas which this is out of our experience of so many years. We have derived few points where the stock claim gets stuck. So first is the goods held in trust. I am doing job work for somebody, or I am holding goods in trust for somebody. So this particular item should be part of the value of such goods should be part of my sum insured. Goods sold but not delivered. Many a times it is basically when in a particular warehouse, any goods which are to be dispatched tomorrow morning, people invoice it the day earlier and keep it ready for dispatch. So this kind of goods, basically when you invoice these goods in advance for tomorrow morning, these goods go out of your stock and this will not be part of your closing stock. So you have to ensure that whenever a claim is submitted, these goods which were ready but not dispatched have to be added in your claim. Job work done outside. So whenever there is a job work done, I am sending my goods to somebody for job work. I have to ensure two things. One is the location insured, and second is that in addition to the material cost, I have to also cover the conversion cost, which is actually incurred by the job worker, but yet not come to my books. But if my goods are ready as FG, then that conversion cost also should get compensated. So that should be added in your stock sum insured. Inter-unit transfer of stocks. This is basically a worry for this is a point of concern for various small SMEs where you have galas in sequence, one adjacent to other, and the various processes take place in this particular in sequence in this particular galas, and the movement of the stock, different process is handled in different galas. However, the movement of the stock is not recorded in the books of accounts. So when the loss takes place in one of the unit, it is very difficult to arrive what was available there. So it is very much important that the transfer of goods from one unit to another should be recorded in the books of accounts. Warehousing practices, mother warehouse and child warehouse. So the same thing, that whenever the goods are getting shifted from mother warehouse to child warehouse, this movement should be recorded. Molds and dyes. Molds and dyes are a specific exclusion under the policy. However, it can be covered by a specific mention of the item and the sum insured. Spares and consumable packing stock. Many a times it happens that being these items are of small value, people keep on accounting it as a profit and loss item and not as a stock. If it is not accounted as a stock, it will not form part of your claim, because we are utilizing the stock sum insured under the policy. And if this is charged to your profit and loss account as consumable, it cannot be considered under designation property clause. The slow moving and absolute stocks. So many a times it happens that I purchase some stock for trading, but these things, because of the item becomes out of fashion or slow, the things are not sold. So the claim will have a deduction of slow movement. Absolute stock is basically the dead stock. Brand and trademark clause. This is a very important aspect for a particular business where your goods are sold on a brand. Basically, what happens is that when a loss takes place, like taking an example of a shirt manufacturing company like Arrow, the goods are ready for dispatch and there is a fire. Every shirt will have a brand embossed of Arrow, or there is a trademark mentioned on it. If this kind of whenever loss takes place, the insurance company would like to minimize their losses by selling these particular items in the open market as a substandard good and minimizing their losses. However, what happens is that by selling these substandard goods, your original goods market is lost, or it is a damage to your goodwill or your brand. So to protect from that particular type of losses, the brand and trademark clauses are taken. So the goods are basically sold after removing the brand. So that saves your business. Assembly of the goods. Many a times it happens that the assembly happens at various different locations. So when you have a single process getting addressed at some location, but that location also need to be covered. Next. Okay. So now we come to our stock, the start of the stock presentation. So basically, what is stock? So stock is basically raw material, work in progress, finished goods, and packing material. All these items, raw material is basically purchased from the market. Work in progress is actually the combination of various raw materials towards a finished good. Finished goods is basically the when work in progress is over, the finished goods is the status of the goods, and packing material is the material which is generally used for packing of the goods before it is dispatched as finished goods. So packing material would include the containers, the cartons, the pallets, the BOPP films, etc. Next. Okay. So whenever a loss takes place, the very important thing is that there are only two dimensions to a stock claim, any claim for that matter, the cause and the extent. So what do you mean by cause? Cause is basically the peril or the reason due to which this particular fire has taken place. So and fire insurance policy being a named peril policy, the SFSP, that is the standard fire special peril policy, the BSU, that is Bharat Sookshma Udyam, the BLU, that is Bharat Laghu Udyam. These policies are named peril policies. There are causes, the specified causes are covered under the policy, and rest all are exclusions. So it becomes a condition precedent for insurance company to arrive whether the reason arising out of which the fire has taken place is covered peril under the policy or not. To arrive that, in case of major losses, the insurance company appoint forensic investigators. These are basically independent professional appointed from the market, hired from the market, and they try to find out what is the cause, and also an aspect how what is the extent of the hydrocarbons in a particular loss site. Many a times it happens that the extent of the hydrocarbons available is more than what is the hydrocarbon that is expected at the site. Like if I am running a business of say pencils or a metallic item, there if you find lot of hydrocarbons more than what is expected, in such circumstances it can be fairly concluded there is an attempt of arson or willful damage to the property. So this can be one of the outcome. Now the quantification and the once the cause is finalized, the quantification of the stock. That is, I have 1000 cartons stored at a particular warehouse. There is a flood. Water level is, say, the height of the go down is say 10 feet and the water level is 5 feet. So what I will try to do is that the claim is restricted to the water level, the damages done to that particular stock. So up to 5 feet, I will try to identify which are those goods which are damaged up to 5 feet, and rest will be the sound goods. So the primary job of the surveyor is to quantify out of the total stock what is damaged and what is undamaged, and further in the damage what is partially damaged, what is totally damaged, what can be refurbished. So accordingly he will try to minimize the loss with taking the consent from the customer. Next. So how to determine a closing stock? So closing stock is basically we have seen that what type of items fall under stock. Now closing stock is the value of the total stock held at any given point of time, and for that matter at the material time when the loss takes place. So there are only two dimensions to it. One is the quantity and the second is the rate. So quantity is basically what comes in, what was there, what comes in, what goes out. So the net effect is the closing quantity. And then what you do is that what is the last purchase rate or what is the average purchase rate of such type of item? You multiply it with that with the quantity, and then the total value of the closing stock is arrived. Next. So to arrive, how we arrive the value of the closing stock is this particular slide talks about it. So we will talk about the raw material first. So if you see the bottom of the slide, there are four criterias. A, that is the market value of the raw material. B is the cost of conversion. C is cost of quality check, and D is cost of packing. So the first is raw material. So raw material, we will have only the cost of the raw material. In case of raw material, it is only the purchase cost. In case of packing material, it is also a kind of raw material. So only the purchase of the raw material. Work in progress. Progress is basically the raw material. Two different types or more than one raw materials is put into the process. So, and some conversion cost is incurred. So A plus B, that is the cost of raw material plus conversion. Then the semi-finished stock. Semi-finished stock is a much improved version of the work in progress. So I will have raw material, I will have conversion cost, and sometimes I will have the cost of quality check. And the fourth one, the final one, the finished stock. So which is the topmost category, that is which will have raw material, which will have conversion cost, which will have quality cost, quality check cost, and fourth is the cost of packing. Next. Okay. So now we will go into the details of how the closing stock is arrived at. So as I earlier I have explained that there are four types of materials. One is the raw material, then the packing material, then the WIP, that is work in progress, and finished goods. First, we will deal with the raw material. So how we arrive at the closing quantity of the raw material, which is also called as how will we arrive at the movement, or how will we deal with the movement of the raw materials. So first what we have to do is that we have to go back to the last certified date of the financials. So supposingly the loss has taken place on the 1st January of 2025. So last certified balance sheet available is of 31st March 2025. Okay. Sorry, 31st March 2024. So there will be a closing stock on 31st March, which will be an opening stock on the first day of the financial year, that is 1st April 2024. After that, there will be some inward of the raw material by way of purchases or stock transfers. Then there will be outward of the raw material by way of the issues or trading of the raw materials. When we have a summation or the equation, that is the opening stock plus inward minus the outward, you will find that the closing stock is arrived, and that closing stock is the closing stock for that particular day when the loss has taken place. Out of that, it is quite possible that 100% stock may get damaged, or there will be a partial damage to the goods. So to the extent it is damaged, that is the damaged quantity, and the total quantity is the called as the closing quantity for raw material. Next. So now, so in case of packing material also, the same similar kind of approach is applicable, as it is also a raw material. In case of a finished goods, so the finished goods is not purchased. See, if I am purchasing the finished goods, then I am a trader, I am not a manufacturer. So what happens is that finished goods is basically given birth in my factory only. So finished goods, I will have an opening stock of the finished goods in the first day of the this particular financial year. In that there will be inward, that is the manufactured during the year, and there will be outwards, which will be outwards by way of a sale or a branch transfer, and after that there will be a closing stock. So if you add inwards to the opening stock and outwards and reduce the outwards, you will get the closing stock of the finished goods. Next. So, so how that particular data is presented, this slide talks about that. So if you see, just to summarize on the earlier two slides. So first, if you have raw materials of different nature, suppose you have 25 raw materials to manufacture three types of the finished goods. So what will happen is, in the item name, you will have 25 rows of the raw material. Then you will write in front of each raw material the opening stock for the first day of that particular financial year. Then, and all these figures are in quantity. These are not the value figures. So opening quantity for each such individual items, then the inward quantity during that particular period. Like suppose if your loss is on 1st January 2025. So the period is 1/4/2024 till 1st January 2025. This period, you will try to total the inwards by way of purchases and branch transfer. Then you will deduct the outwards for this similar period, that is the outward in by way of issue to the production or trading. Okay. And then accordingly, you will arrive at the closing stock for each item. Okay. Similarly, in case of finished goods and stock in process, you will have opening stock. If it is categorized in your balance sheet, in the certified balance sheet, then you can have these items listed. Against that, you will have the opening stock. Then by way of manufacturing, whatever finished goods had come in, that you have to add. Whatever way, whatever outwards by way of the sales and the branch transfers, you have to reduce. And then you will arrive at the closing stock. Next. So one more thing, that in case of finished goods, the when you arrive at the quantity, what happens is that arriving at the rate for the raw material is very easy activity, because you have a purchase bill for that particular raw material. But arriving at the rate for the finished goods, because that finished goods is manufactured in my factory only. So for example, if my finished goods, there are 5 types of raw materials go into a finished goods, then 5 raw material need to be listed. Against that, the quantity used, and as per the quantity used, what is the cost utilized for that raw material. Then there will be a conversion cost. Okay, we have seen the earlier slide where there were lot many aspects with respect to the raw material, the cost of the raw material, the cost of conversion that we discussed. So you need to create a cost structure for individual finished goods damage to arrive at the cost per unit for that finished goods, and accordingly the value of the material is used. Now, in case of a stock claim, the insurance company wants the location is very important. So in case of a fire claim, when the policy is on a floater basis, you may have 5 to 6 locations at one covered under one policy having floater clause, but out of that only one location is affected. So for insurance company, the stock on the overall location, that is all the 5 locations, that is on floater basis, that is important. At the same time, what stock I was having at that particular location, that is also important. So it is very much important at the end of the claim submission that a chartered certified document certifying both these aspects need to be submitted to the insurance company. Next. So how the claim statement is arrived for the stock. So if you see the first 5 columns, these are repeated from the earlier slide where we discussed about arriving the closing stock. Once you arrive at the closing stock and the rate is also arrived, you will have the closing stock value. Then in front of that, you have to map the damage quantity for that relevant raw material, relevant finished goods, relevant packing material, or relevant WIP, that is work in progress. Once the quantity is mentioned, you will be able to do due diligence yourself whether you are claiming more than the closing quantity. That is one of the aspects need to be checked. And then you multiply it by the same rate by which you have multiplied the closing quantity and arrive at the damage value. Next. Now, implication of the GST in the, this is a very crucial aspect in a stock claim in terms of getting the claim and also at the time of issuance of the policy arriving at the sum insured. Many people have got a misconception that GST, since I am taking a set off, it is not my responsibility to take GST in the sum insured. However, GST is only applicable in case of a contingency. So the relevant section under CGST Act is section 17(5)(h), which says that uh, can't see the slide. basically have a important role to play in a stock claim as well as the policy. Okay. So basically, in case of a stock policy, you need to ensure the GST. Policy is taken for only reason that the policy is taken for contingencies, and in case there is a contingency and loss of the stock, you need to reverse the input taken on such goods. So in case there is a fire, there is a total loss of the goods, your cost towards such stock is 100 plus 18% GST, so 118. So in case you are taking the sum insured for stock, it is 118% or 118 rupees. That is 100 rupees material cost and 18 rupees the stock cost of the GST. Now coming back to the claim. In case of a claim, what happens is that when a claim is lodged, we are only talking about the cost of the goods, but not the GST. GST is required to be reversed as per section 17(5)(h). So it has to be the part of the claim. So if we go to the the earlier slide, there will be one more column where the GST against the damaged stock is configured, and accordingly the stock is claimed. So by this slide, I complete my presentation on the stock claims. I hand over the baton to Mr. Pramod.
Thank you so much, sir, for your nice informative session. I hope that would have been much informative and would help a lot of our attendees to uh, revisit their insurance program and take adequate measures, or maybe come back later for more queries. Agar if required, we can do a one-to-one session. Right. With this, we've got so normally any insurance claim is foreseen as something between the insured and the insurer, but there are other stakeholders involved in the claim, including the surveyors, of course, the broking company team members, their claims managers. But apart from that, the forensic investigators are involved, which who tries and identifies, as sir pointed out rightly, about those hydrocarbon content, which is nothing but those petrol and diesel foreign material part of the claim residual. Similarly, salvage buyers also play a very important role as a loss adjuster, because once there's a claim, it's not necessarily the in stock. Most of the time, it's a total loss claim. It may be a partial loss claim. In that case, it has to be segregated into totally lost, partially lost, or not lost. And similarly, accordingly, the salvage buyer plays a role in disposing of the claim, which is basically a loss adjuster's role. See, these are the few claims which I've handled recently, including one claim of around 24 crores, which was for a yarn texturizing unit. Similarly, we have handled a lot of multiple claims in lubricant oil business, yarn, polyesters, pen and stationery, rubber, cable. And let me tell you, every claim we have handled in property and stock were unique in their aspect, because a lot of businesses are different, and surveyors have to be appraised of the business model, and accordingly we create a lot of comfort with the surveyors by appraising them about the business process. We try to bridge the gap between the insurance company, surveyor, and the insured, to ensure that the claim settlement documentation is smooth and fast. Claims management, we have handled more than 10,000 claims. We have been operational since 2005. So right from drafting, documentation, and settlement, this is all our responsibility. This is the entire gamut, including our 38% of our claim comes from employee benefits, around 22% from property, and so on. Marine is contributes to 8%, liability we've got 3%, and credit, which is payment default risk. Signature is your health and motor claims. So what we bring to the table is, of course, the inside knowledge, because we work very closely with certain industries which help us to be on toes. We are able to give a lot of insights to our finance heads, risk managers, owner directors, best comparison of quotes, of course, bundled service, 30-day TAT, single window concept. These are few of the aspects which make us a cut above the rest. And So with this, claims is the moment of the truth. That is what we are here for, and we believe this is the moment to deliver. A lot of times, these experiences of claims leave a very lasting impression on those people who are on the other side of the claim, and we are committed in our journey to help the business owners, whether in manufacturing or trading or infrastructure companies or whichever industry they represent, that we'll do everything right to ensure that they get their fair piece of claim. And we have been doing it for the last 20 years, and we wish to continue to do this in years to come. We are also working towards standardization of claim documents, wherein we are incorporating certain standard practices on claim settlements through SLAs and documentation checklist. And with this, I'm calling it a day for the today's webinar. Thank you so much for joining us. It is always pleasure to be presenting, and we'll come back with such knowledge sharing sessions in future as well. Thank you so much. Thank you, everyone.